Oh, what a week for the markets, and oh, what a week for equities. Obviously, a lot of sellers come in. A market just got crushed for most of the week, and then late in the week, we saw a big rally off those lows. Mini S&P's got as low as 2,400. Saw about a 280-point rally off those lows, and at this point, equities have gotten beaten down pretty good. Obviously, there might be some value buying in there. There are still some big risks that more selling will appear if things don't turn around economically and the coronavirus doesn't find a vaccine or a cure in the near future. But at this point, it seems like for the short term, there may be just a pause and maybe a stagnant trade inside of the range that was created this week. And this week was quite the range in equities, even though we settled right around the midpoint of the range. The rally about 280 points off the lows was quite significant. It was a stimulus-fueled rally, not only from our own Fed a few weeks ago cutting 50 basis points. We're seeing central banks all over the globe come in. You had Canada, you have the UK, you've got Europe, you name it. They're all coming in to assist their economies, and that's looks very much like it did in 2008, coordinated types of cuts and stimulus. And our Fed is no different. They started the whole ball rolling, and we'll look to continue that next week. The VIX index, well, the VIX made a huge move up north of 80 at one point this week, and actually was down in the mid-50s on the lows of the day today. So still elevated in that red line area, but off those extreme highs. And look for the VIX to continue to remain elevated. The days of trading a 10 or 11 VIX may be over, at least for the time being. And I think that right now market swings are going to continue to be very wide, very sensitive, and they'll be about liquidity and demand in equities here as we see headlines come across the board, or as we see progress with this coronavirus, as we see the economics of what the ripple effects could be of this coronavirus come through. The equities will be very sensitive to all that, and I think that the flight to quality out of equities and perhaps into cash will continue. At this point, though, buyers are looking to find deals. There are deals out there right now in individual stocks and indices. So I think that you're going to have a back and forth trade, but it will be very much exaggerated if things don't go well in the short term. And first way it could go well, obviously, the Fed meeting next week, a meeting that's been on the calendar for quite some time. I think at this point, the Fed's probably locked into cutting 100 basis points. At least that's what the market is telling us. But after cutting 50 earlier this month, another 50 taking us down to zero, seems pretty extreme, but why cut another 50 when you're going to do another 50 after? I think at that point it does no good for anyone. Let's get all our cards on the table. The Fed's already injected into the short end. They're into the repo markets. They're already very active there with QE, and they're adding with buying more treasuries. And so why short the market here with only a 50 basis point cut? The market's been telling you 100 this week, the last 2 days especially, and probably the Fed will deliver, and then we'll work on QE metrics as we go forward, maybe pulling back some of the QE metrics before raising rates, kind of when the market gets its sea legs back under it. But equities should thrive in that market, in that environment, as it did back in 2008 and 2009 when it bottomed out in the E-minis at 666 in March of 09, and then all it did was go up after that once the Fed added a lot of its policies in place. So at this point, heading into the weekend on more of a bullish tone after a very bearish week, it'll be very interesting to see what happens after the Fed meets on Wednesday. And again, treasuries will be very sensitive to what's going on around the Fed, but the Fed looking to keep a sustained market, keep volatility sustained, try and get off those extremes that we saw this week. But ultimately, it's going to come down to supply, demand, and liquidity, things that have troubled the market this week. But hopefully next week, we'll have better luck.